Welcome to Morningstar. I am Francesco Lavecchia, and today with me is Jelena Sokolova, Senior Equity Analyst at Morningstar. As the takeover bid started last week, Dufry, the world's biggest airport retailer, will complete the acquisition of the Italian company Autogrill, a global player in the travel, food and beverage industry. Can you briefly summarize the conditions of this agreement?
Hi, Francesco. Thanks for having me. Basically, at the start of the deal, the biggest shareholder of Autogrill, which is Benetton family through its Addizione holding, will basically has already swapped its 50.3% stake in Autogrill for Dufry shares with a ratio of one Autogrill share for 0.158 of Dufry shares. So currently, the remaining shareholders have two options, basically. Either go with the same deal as Addizione or sell their Autogrill shares for 6.33 euro each. So basically, financially, where Dufry shares are trading now, the financials of the deal are quite similar. However, given that we're seeing the shares as undervalued, we think that the stock option could be a better deal for Autogrill shareholders.
So, do you think Dufry paid the right price, or it was Autogrill who made a good deal?
We think that the acquisition was approximately fairly valued.
And now, about the strategy behind the deal. Why did Dufry decided to buy Autogrill, and do you think it will add value to the Swiss group?
Yeah, so travel retail in general is a consolidating industry, and Dufry has historically grown through acquisitions. The acquisitions are needed to build a scale with suppliers and also to be able to bid competitively for airport concessions against maybe less scaled, smaller players. Our research has found quite significant correlation between scale and gross margin. However, it is the most relevant with sales being up to 1 billion. Currently, with the group size, there is much less correlation between gross margin and scale. Further, since the product offering of the two groups has relatively little overlap, there may be a bit less gross margin synergies. However, on the operating synergies and overhead costs, there still could be good costs to be extracted. The company expects 85 million annual synergies going forward for the group. Also, the offering of Autogrill in food is quite complementary because Dufry has not traditionally been very strong in food.
Let's finish with our view on Dufry. Why do we think the stock is undervalued?
Yeah, so we think that investors are still quite concerned about the pace of recovery of travel industry and travel retail post-COVID, given the inflationary pressures and lowering consumer sentiment. We are, I think, more sanguine on this front. We think that travel should benefit from pent-up demand from pandemic years, and even if the consumer budgets are more restricted, they will more likely spend more on experiences than goods compared to prior years. Also, the rebound in Chinese travelers this year after COVID restrictions have been lifted should provide a boost to Dufry. And finally, Dufry also has improved its balance sheet after the pandemic, and with the more disciplined bidding for new contracts or renewals and initiatives to boost revenue per passenger, revenue and operating margins of the group should benefit.
Okay. Thanks a lot, Jelena, for your time and for your insights. For Morningstar, I am Francesco Lavecchia. Thanks for watching.